how does this gain or loss affect your taxes? Well, you can't really say on an individual basis, meaning if you're looking at one property you sold, unless that's the only property or item you sold for the year. And that's because of the netting rules for all gains and losses. In addition to just actual assets that you own and sell, included in the netting process is amounts that flow through to you through activity like in mutual funds or retirement plans, a partnership, or other types of investments. So it's very common to see capital gains flow through. For the netting process, there are two major categories. First is business use assets, and second is capital assets. For the business use assets, these are items that you use to earn income. These would be common for you to have if you're self-employed. Now, capital assets include most other assets that people own, and within this category, there are two types because of different rules. The first is personal use assets, which is your home, your cars, household furnishings, collectible items, boats, toys, etc. The second category is investment assets. And these are items that are held for investment, like stocks and bonds. But note that this does not include the business use asset, and rental homes have their own specific rules that I talk about in another video. So the IRS provides a list of what is not capital assets specifically because there's so many items that are included in this category. So if you hold items to resell to customers, that's actually considered inventory for your business, and there are very specific rules for that as well, and it is not included in the gain or loss calculation. The first criteria in calculating the netting process is based on the amount of time you own the property, which is called the holding period. And this is called short term if you own the item for less than 1 year, and long term if you held the asset for more than 1 year. For the netting process in general, all of your short term gains and losses are netted for a net short term gain or short-term loss, and the same for long-term. Now, if the short-term and long-term net amounts are both gains or both losses, then the process stops there. However, if one is a loss and one is a gain, then continue to net for what's called a net short-term or long-term gain or loss. Gains and losses are either treated as ordinary or capital. Short-term gains or losses are always considered ordinary, which means there's no preferential treatment. For short-term, gains are taxed at your ordinary income tax rate for the year, and for losses, there is no deduction. Now, if you end up with a net capital loss, up to $3,000 can be deducted from your income each year. But if you're limited because your losses are greater than $3,000, you can actually carry that excess amount that wasn't deducted forward to be deducted and included in the next year's calculation. On the other hand, if you have a net capital gain, there are preferential tax rates so that you're always paying a lower tax rate than your ordinary income tax bracket. For capital assets, losses related to your personal use category are actually not included for the $3,000 deduction. Only the investment assets and also most of the business use assets. So yes, they will tax you if you have a gain on those personal use assets, and if you have a loss, there's no deduction. But for the business use assets, the gains and losses will be categorized as ordinary or capital as well and go through the same netting process. But there is more calculation and rules for the business use assets because of depreciation. So depreciation affects calculating the adjusted basis for the sale of the business property and the gain or loss calculation. And there's also steps for recapturing depreciation at ordinary rates. So the netting process is reported with your individual tax return and is calculated on Schedule D, capital gains and losses, and Form 8949, sales and other dispositions of capital assets. For business use assets, the calculation begins on Form 4797, sale of business property, and then amounts flow to the other forms as required. Thanks for watching, and let me know if you have any questions in the comments below.